I want to say good morning to everyone, and I actually want you to say good morning to me. I had Thierry say good morning, and everybody looked with a glum face at him. And I said, it looks like we need coffee on these tables today. It is a very busy week in Washington. We're very delighted to have you all. And I am particularly delighted to be at this event. The Africa Investors as an organization has come a long way. I recall the early start of this organization, and they are an example to study in terms of resilience and staying on an issue and a vision. So I do want to applaud them for the fact that they have sustained their effort, and today we're collaborating with them proudly to host this event. The World Bank Group is very delighted to be partners with the Africa Investors magazine and its many partners as well as the sponsors to put this event together. As Thierry clearly laid out, the World Bank is bullish on Africa. And the reason is simple. Africa, as President Zolik constantly says, is a potential growth pole. And that being the case, we need, as development partners of Africa, to continuously set the stage in terms of the prospect that we see, the obstacles that are there, and what our role, as Thierry said, from the IFC angle, is to trigger the possibilities and to move them to newer and better levels. There is no doubt in our mind at the World Bank that Africa is at the cusp of an economic transformation. I would like to follow up on some of the points that had been made and pick from the thoughts expressed in a recent article just a few days ago with the Wall Street that was captioned, "Catching Africa's investment bug is proving contagious." This, frankly speaking, this is a contagion effect we've been looking for all along concerning Africa. And so it is certainly a good thing that many more institutions, many more organizations are seeing the evidence-based basis for making decisions that are positive toward Africa. Africa south of the Sahara, regardless of the positive news about it, still faces challenges. However, it has its brightest prospect in a generation today. Before anyone dismisses this as a soppy, sentimental, and overly optimistic view of Africa, it's important to see some of the facts that stand to the credit of that argument. Before the outset of the financial crisis in 2008 and 2009, Africa was growing on a steady pace of about 5% annually. And in fact, the last 3 years before the crisis was on a steady annual growth of an average of 6%. The growth was actually widespread, contrary to what a lot of people try to present, that it was purely commodity driven. 22 non-oil exporting countries were sustaining growth higher than 4% over a period of a decade. Poverty was declining at least a percentage point annually, matching the pace of what we've seen in places like India. The child mortality rates fell by some 25% in 4 years in about 13 countries in Africa and across the continent. The fight against HIV and AIDS and other disease burdens were gaining traction. Primary school enrollment was increasing, and primary school enrollment rates were rising faster than in any other continent. And we also saw improvements in the completion rates. Over 60% of Africans and 80% of urban Africans are in the range of a GSM signal, making mobile phone the most prized asset of the poor. I actually particularly am known for talking about this asset of the poor. If there's any asset that has liberated the poor in Africa, it is the cell phone. And that's one lesson that stands us in good stead for seeing what the possibilities are for Africa as an innovation ground. All these culminate in an Africa that's perhaps at a place that India and China were 20 years and 30 years ago, just before their economic boom set in. Thanks to the policy makers, and I acknowledge those of them that are in this room, the ministers that have joined us for this event, and other officials of government, thanks to the steady course that they have followed in embracing the importance of macroeconomic stability and the importance of sector-specific reforms that are important for setting the stage for private sector leadership of economic growth. We have seen this growth of Africa lead to the quickest rebound of Africa after a crisis. In the past, whenever there was a global crisis, while others recovered, Africa stayed or even declined further post-crisis recovery of other nations. But in this latest crisis, we have seen a rebound. Our estimate is that Africa is going to grow at some 4.9% this year, and by 2011 and 2012, at higher levels of 5%. And that's significant. As a point of emphasis, the growth story is hardly limited to the extractive industries, despite the fact that 11 of Africa's countries rank among the top 10 sources of at least one major mineral, and the continent is likely to produce some 13% of global oil by 2015, up from the 9% that it did in 1998. So the prospect for Africa is very bright. There are certain important reasons for those of you who are the businessmen and who have to make decisions in boardrooms always. First, the interrelatedness of social and demographic changes would create new domestic engines of growth. Key among these would be urbanization. And this is one aspect of our program. Whereas Thierry, Tanor, and the IFC really focus on the private sector, strictly private sector enabling activities toward development of the continent, we, working with the public sector, enable the public sector to prepare itself to be strong policymakers, strong investors in the necessary public goods that would be preconditions for the entry of the private sector. And so one area that we're beginning to do a lot more in helping the public sector organize itself better is to look at the urbanization issues in Africa. Africa has a labor force that is expanding, and there's a rise of the middle class consumer in Africa. In 1980, just 28% of Africans lived in cities. Today, 40% of the continent's 1 billion people, a proportion that's roughly comparable to China's and larger than India's, live in cities. By 2030, that share is projected to rise up to 50%. And Africa's top 18 cities will have a combined spending power of 1.3 trillion. It is important to highlight that urbanization can breed misery if it creates slums. And the worst kind of poverty is urban poverty, because rural poverty is still enclosed within the community, and community rises up to provide some measure of social safety net. But the urban poor are completely the reject of the earth. So it is important that we should boost Africa's productivity and create the opportunities that regional geographies, the whole regional geographies and the import of it in economic growth is key for us. And we're working in that regard. Meanwhile, as I said, Africa's labor force is expanding. In contrast to much of what is happening in the rest of the world, the continent has more than 500 million people of working age. By 2040, that number is projected to rise to 1.1 billion. That's pretty significant statistically, more than in China or India, and therefore this is a lifter of GDP growth potentially. Over the last 3 years, 3/4 of the continent's increase in GDP per capita came from an expanding workforce, the rest from higher labor productivity. Second, the advent of ICT has been very, very critical to the development of economies in Africa and has become the source of more than 60 billion in private investments between 1998 and 2008, a decade. It's just amazing. It has not only helped to bridge the knowledge gap between Africa and the rest of the world, but it has also offered transformational opportunities by enabling access to finance, enhancing the dynamism and the efficiency of the markets. I simply say that with what has happened through ICT in Africa, that frankly, this is the most liberating perspective that the poor could have. This thing called the cell phone has so liberated and empowered the poor in Africa, changed their dynamism in terms of economic relations, in terms of social relations, and as also has incredible potentials for changing the dynamics of the political economy constructs of relations on the continent. And so it is our sense that the potential of the 450 million children growing up with a mobile phone in their pockets, that is much more than the US, Canada, and Mexico combined. Imagine what that would mean. The story of the transformational impact of the ICT is often told of Kenya's M-Pesa that was launched in 2007, one of the most successful stories of mobile money service, generating more than 8.8 million users, many of them without access to a bank account. It was so exhilarating for me when one of the countries in Asia came to me and said, we traveled to Kenya to go learn how to deploy the cell phone to greater application for our solutions. That, well, Africa is sharing best practices with the rest of the world. So that's significant, and that's important. A decade later, more than 1.96 million on average is being transferred through the M-Pesa daily, mostly in small amounts, averaging just $20 per transaction. Thirdly, as I said, the continent accounts for more than 1/4 of the world's arable land, and the fact that it currently only generates 10% of global agriculture output implies that there is a huge growth, a huge potential for growth in a sector now expanding only moderately at a rate of 2 to 5% a year. If somebody asks me and says, what's the next big thing that will happen in Africa? I would say agriculture and agriculture, production and productivity, agribusiness, that entire chain is just waiting. It's waiting for the first movers. And you know, it makes me stop. It makes me stop and tell some of you that are here that I witnessed some of the people that missed the opportunity in the telecom sector. I used to be in government. And when my own country was going to liberalize the telecom sector and offer the opportunity for auctions, the president that I served at that time called one of the premier institutions in telecom services in Europe and said, do me a favor, take an interest in my country, come and pick up one of our licenses. And they said, no way, this is going to make our basket of investment messy. I mean, as a president of a country, you hear that, and that is pretty demoralizing, isn't it? And he left it there. And this auction took place And some of the companies that understand, as Thierry said, that you play for the long haul, came up, picked the licenses. Today, that country's transformation has been unbelievable. The early movers have cleaned up in that market. Well, for those of you listening to me, I hope that says something about the agriculture sector and the agribusiness sector for the continent. It's the next big thing that's going to happen. Finally, a sector like tourism is an important sector. You look at the conclusion of the 2010 FIFA World Cup, a tremendous example of what Africa can offer the world. And you know that, that tourism is an important thing, and it has an exceptionally important role in investment. Most people want to visit a country before they invest. So tourism is important and central, Thierry, to changing the perceptions about the African countries. And so perception management, in order to boost tourism, is an important area that we are also working with the continent to connect to the infrastructure development. Not many know that more than 29 million tourists visited the continent in 2008, of which 45% went to South Africa, 35% went to East Africa, and 20% went to Central and West Africa, creating more than 10 million direct and indirect jobs and $42 billion in export revenues in the process. Not many know that over the past 20 years, tourism has emerged as an important source of revenue and growth in Africa, with a steady growth rate of 5% per annum and accounting for 8% of GDP. Good enough, private capital is already taking note. Between 2000 and 2008, FDI increased from 10 billion to 88 billion in Africa, more than India's 42 billion, and even more remarkably, catching up with China's 108 billion. But remember, Africa is not a single country. It's a continent. It has many countries. Since 1990, Sub-Saharan Africa almost tripled its exports and diversified its trade partners. Chinese imports alone from Sub-Saharan Africa increased dramatically from 64 million to over $13 billion. As Thierry said, challenges still remain, and that's why I always fall back on Winston Churchill when I think of challenges. He said, the pessimist sees difficulty in every opportunity, the optimist sees the opportunity in every difficulty. I hope that the people listening to me belong to the second group. For Africa to take advantage of the current investment bug that is paving the way for a new Afro-optimism, it must stay focused on a few areas. And so now I address the policymakers in our midst. Infrastructure. The reality, I was just in China with President Zolik just a couple of, less than 2 weeks ago. And I mean, if the story of China's economic growth and development is the story of the transformative capabilities of infrastructure. And so infrastructure, energy, roads, rail, ports, they remain a critical bottleneck on the continent, creating an obstacle, creating a pervasive state of cost of doing business on the continent. Less than 20%, 25% of the continent has access to electricity compared to 40% access in other low-income regions of the world. The consequence is that Africa is less competitive beyond the factory gate and remains constrained and unable to take advantage of the 2% increase in growth and the 40% increase in productivity that is possible from better infrastructure. Access to finance, Thierry talked about it, so I won't go too much into it. But keeping a focus on the youths and the women and how we break up the constraints and the barriers to their access to finance, that's going to be key. Strengthening financial sector stability, that's important, and that's where ourselves and the IFC, the World Bank Group, works together we work together to try to foster inclusive financial systems and to deepen regional integration of the financial markets. For example, in Mali, Madagascar, and Mauritius, we have, through a special IDA is our International Development Association. It's a concessional financing window for the poorer countries of the world. 38 of the 79 countries that we give IDA to at the World Bank are African countries. So our IDA IFC initiative, we use bank loans to support the establishment and operation of partial credit guarantees. And this is important because for many people who are hindered from entering Africa's private sector, it's often the fact that the risks are considered so enormous that they do not want to enter. So partial credit guarantees are available. These are risk-sharing programs that support commercial bank lending to SMEs by partially backstopping potential losses resulting from non-payments to respective SME portfolios. The significant improvement that we've seen in Africa's policy environment and the business environment is another area that's worthy of mention, but challenges remain. And so we hope that the policymakers will do everything possible to remove the remaining constraints to investment. Countries on the continent have embraced different formats for this. The Presidential Investment Advisory Council, our director for our private sector and finance department in the Africa region, is here, and she would be, I think, chairing a session. We established and worked with governments to put in place these systems of presidential advisory councils in countries like Ghana, in Senegal, Tanzania, Mali, Uganda, Benin, Republic, Burkina Faso, and Mauritania. Improvement in the investment climate, as you know, is a prerequisite for attracting both foreign and national domestic investment, and notably from Africans in the diaspora. I believe that there's much more work that needs to be done. The development of frameworks for increased public-private partnership is a place that we need to do more work. We at the bank are going beyond simply helping countries to set up the legislative, the legal frameworks and the institutional complements for managing public-private partnership, but also looking at it from a public-private dialogue perspective, a dialogue toward a solution. And so we look to being facilitators of this engagement with government and the private sector. Now, let me begin to bring this to a close by saying that President Zotlik talked about open development. Open development means that the solutions to development no longer lie within single players. This is a time for collaborative partnership. And so the partnership between the private sector, the partnership between the private sector and government and civil society, helped and facilitated by partnership with institutions like ours, the World Bank Group, would stand in good stead for Africa's continuing growth. We know for a certain that what Africans have been telling us as we work toward the renewal of our own strategy for engagement with Africa are the things that we have seen over the decade as things that enabled the growth that the continent is today witnessing. An emphasis on policy, an emphasis on judicious investment in social sector to ensure that the capable human skills that Africa needs to compete is built, an investment in important infrastructure, building the right institutions and frameworks to enable private initiative. These are the things they've been saying to us. But even more, Africans have been telling us in the process of the renewal of our strategy that growth alone is not sufficient. It must be jobs creating growth. And that is where the private sector does it the most. Any job created by the public sector, I call it political job, it will not be sustainable. The private sector capability of job creation is the one that gains our interest. And that is the reason why we particularly consider an integration of our work with the private sector in Africa as being key for the next level of our support to the continent. So Africa is indeed making progress and growing, but Africa's success is still fragile. Vulnerability remains, and it remains very high. The pace of the progress is uneven because if you unbundled the 47 countries south of the Sahara, you would see an unevenness. If you took the taxonomy of these countries, there are slow-growing countries, there are countries that are still so fragile, and then there are the fast-growing countries, and then there are middle-income countries. You have to unpack in order to engage. Now, the private sector is critical to creating the foundation for a strong shared economic growth, growth that is inclusive, broad-based, and pro-poor. In this process, public-private dialogue will play a critical role. Ladies and gentlemen, my best counsel for all of you seated here today, who are members of any board, is that you probably need to reassess the wisdom of your decision to recruit any CEO that has not yet presented your board with an Africa strategy. Trust me, dear friends, I wish to boldly really say to you that Africa has risen. Africa's time has come. But even more so, it is the continent that's actually the future. Thank you very much.